the most common questions that we get in insurance in Michigan specifically is, what is my BI limits, or what should I carry for my bodily injury in my PIP coverages? Those are like the medical portion. Well, first, if you don't understand what those two are, there's some easy ways to figure it out. So bodily injury, that's if you injure somebody in an accident. So it's a per person, per accident basis. Commonly, it'll be $100,000 or $250,000 per person, and then $300,000 or $500,000 per accident. And you can go higher or lower, but those are the most common two that you're going to see. In most cases, it makes sense to do the higher of the two because the cost difference in Michigan is so low. Why is the cost so low? Compared to other states, what Michigan does is they have something called personal injury protection. So because we're what is called a no-fault state, we have to carry our own coverage for ourselves. That way we go get our medical and our injuries and our car fixed on our own. You go get your car fixed and whatever the case is on your own. Nobody's fighting about it. The insurance companies will figure it out in the background. So what that does is, because we have a medical that we have to carry in most cases, we'll talk a little bit further about that in a second. Because of that, the liability is so low because most people already have medical. So if I hurt you in an accident, my $250,000 to cover your injuries doesn't really matter because you already have sometimes unlimited medical, or you already have a $500,000 limit on your medical. And so cost-wise, my insurance isn't necessarily going to pay that as much out at a higher cost than any other state would. Then why would I even carry the bodily injury? The rare occasions, and actually less rare, but it happens a lot, is people that aren't from Michigan. If somebody's visiting from Florida, someone's visiting from Indiana or Virginia or whatever state you're from, if I injure you in an accident, you don't have your own medical, and you may not be from a no-fault state. Even though the claim is going to be defaulted to the state you're in, my medical is going to have to pay for that. So that bodily injury that I pay is going to pay that $250,000 for the person that doesn't carry that personal injury protection. One of the misconceptions is that if you're in Michigan, you don't have a car or don't have car insurance, that you don't have the coverage. Well, you do. There's something called an MCCA, Michigan Catastrophic Claims Association. What that does is that covers all Michigan residents. If you don't have insurance, you're automatically covered for $250,000 either way. So if you have a car accident, you're involved in it, the person doesn't have insurance, you don't have insurance, you still have some sort of medical coverage and you're covered. Part of that being the no fault, and everyone that has what's called unlimited personal injury protection, we'll call it PIP, they pay into a statewide fund that just doesn't cover one individual or the people paying in. It essentially just covers everybody that's needed. There's caps and legalized so it doesn't go crazy. It's not another tax, right? They're not just trying to get money. They're trying to build the fund to a certain amount, make sure it's stable there. That way, if claims come in, the people that are injured are taken care of for the state. The long answer is, the higher the liability limits, it's not really an expensive cost because of the medical is usually, in most cases, already covered. So Mark, if that's the case, why do I have to carry personal injury? What's the point of it? What should I carry? That specifically depends on the medical that you have. So there's really three different ways that this can go. Either A, you're retired and you have Medicare A and B, and you can opt out completely and have none. Or B, you have your own medical through a job or some other source. You're paying for your own medical. And that medical does pay for car accidents. That's the key part there. Most medical don't cover car accidents in Michigan. Talk with your provider, they'll let you know if it does or doesn't. And then B, you don't have anything. You're not retired, you're not on Medicare A and B. You could be on Medicaid, which is, we'll talk about at the end. You're just the average Joe in this case, and you're just normal, right? You're just a family, you have cars, whatever the case is. Going to A, most of those people are gonna opt out. If you have parts A and B, you're not gonna pay the extra several $100s for car insurance medical when you have it elsewhere. There is a caveat. You've got to be a little bit careful because there's something that's called long-term care that isn't necessarily part of that plan. If you don't have a long-term care and you get hurt in a car accident, when you give up that unlimited medical that you normally would have carried, you're giving up that long-term care with it. Mark, what's the long-term care do? That long-term care takes care of you. If you need a nurse to come into your home and stay the night, or 30, 40 hours of work, and someone has to bathe you, they have to take care of you, if they feed you, you need a wheelchair ramp, you need all sorts of attention after the surgeries. Once you've gone and left the doctor, someone has to help you maintain your lifestyle. Without that, you don't have it. Now, you could purchase it. I think it's Part F, if I'm not mistaken. You have to talk to a licensed life provider, which we can connect you with one if you want, but that person's gonna allow you to purchase it separately. The issue that most people run into is it's expensive. Outside of the car insurance, it's usually a lot more money than it is inside the car insurance. So in that case, for those that are worried about that long-term care, if you don't have a family member that is nearby that can come take care of you, and you don't want to inconvenience them, if that's the case, you disrupt their whole lifestyle, and you just want someone to always be there for you, then that unlimited package is probably best if you don't have that long-term care. If you do, then there's not really a point to have it. If you've got Part A, Part B, you've got a low deductible, and you have the long-term care, you're paying twice for the same thing. Ultimately, it's your choice. You have to decide that. I would talk with your agent and find out if that's a good fit. By the way, if you are looking for advice and looking for car insurance quotes, we work with multiple companies. I'll put a link in the description below where you can shop with us and check out what options are available at different price points for different companies. That second option is for the person that has their own medical. But you can't remove it if you're not Part A and B. That's the only way they allow you to take it off is if you are technically retired. Parts A and B of Medicare usually means you're 63 or older. In that case, if you're younger than that or you don't have Medicare Part A and B, then you have to have at least $250,000 medical. That's the lowest that the state will allow you. A lot of people will go for that if they have a really good health plan. Look at your health plan. There are limits. You can't go over, I believe it's $6,300 or $6,400 of a deductible. So if you have a lower than that deductible and you have good coverage, then sure, you could do that. What would be the pro and the con? The pro is you're going to save a few $100s on your car insurance. The con is if you have multiple claims, which is rare, but it could happen, and you get injured multiple times, with most of your personal medical, you're going to pay that deductible multiple times. In the case of the car insurance PIP, you usually won't carry more, if at all, a $500 deductible. Now, a sub piece to that is if everybody in your house is on that same medical plan, and it's good coverage, and they'll cover car accidents, you don't necessarily have to give up the high medical through the car insurance. You may not want to leave it yet, and you're like, I'm not sure if I'm going to keep the job, whatever the case is. You can get what's called a qualified health care letter. It's a coordination of medical is what we call it. And if your medical will cover car insurance accidents, you can switch who pays first. So right now, your premium is higher because your car insurance pays the bill right away. You're hurt, you're injured, boom, there's the medical payment. But if you say, I'm coordinating and I have my own medical, I'll pay my own deductible. Now your personal health insurance will pay first, and that lowers the cost that the insurance is going to pay out. So in that case, they're going to lower the price that you're going to pay. Sometimes it's only $60, sometimes it's a few $100s. So it depends on the scenario, the cost, the location. There's a lot of factors. That's why talking with an agent, I'll put that link below, it makes sense. It's having the right fit for the right company. Now we've got the average Joe. You've got a few options that you can pick from. You've got the unlimited, which is what I personally carry. I'm fall in that average Joe scenario. And I just want to make sure if I get hurt or my kids get hurt, they're covered. I don't want any limitations on the medical, and it costs me a few $100s a year to have, which is sad, but it's just part of the game. I'm willing to pay for that coverage. My other option is I could lower it down to $500,000. I could even lower it down to $250,000. So I have those other two options if the cost is too expensive that I can go there. It's not a bad thing to necessarily lower it because the average claim is most commonly less than $250,000. In that case, it doesn't really hurt you to go there. It's just the risk, right? Once again, once you leave that unlimited package, you lose the long-term care, you are allowed to add it back on at a little increment. So it depends on the company. Companies like AAA, I believe, is only $10,000. Might be $5,000, I can't remember. Other companies will do $80,000. Some companies will let you do $100,000. So that's enough to get you up and rolling. But if you're injured for a long period of time, over a year, you're gonna go well over that $100,000 mark pretty quickly. So those are your main options. And I told you I'd mentioned the last part, which is Medicaid. That's a more common thing lately just because a lot of people are on Medicaid. And there's nothing wrong with that. That allows you to drop it down to $50,000. Same scenarios, same situations, but now instead of going that low, as long as everybody in the household has some sort of qualifying health and you have Medicaid or everyone has Medicaid, you can lower that personal injury protection to $50,000. If you have other questions, put them in the comments below. The main thing that you want to focus on is what coverages you need to carry beyond the personal injury protection. If you want a little bit more detailed explanation similar to what we just went over, I've got a full Ultimate Guide to Personal Injury Protection here. If you need to learn a little bit more about your coverages, I've got a Car Insurance 101 that'll help you walk through what are the other pieces to that policy that you may want to look at for coverage. I'm Mark with Valor Insurance. We'll see you soon.